Welcome to our channel, viewers. Today we'll discuss about highlights of meeting of R.B.I. Monetary Policy Committee. R.B.I. Monetary Policy Committee, MPC, meeting highlights. December 2023. Introduction. The Reserve Bank of India's R.B.I. Monetary Policy Committee, MPC, held its fifth bi-monthly meeting of the financial year 2023-24 on December 8, 2023. This meeting took place amidst strong macroeconomic fundamentals and resilient domestic markets, despite global economic uncertainties. Key highlights. Repo rate remains unchanged. In a widely anticipated move, the MPC unanimously decided to keep the repo rate, the key lending rate, unchanged at 6.5%. This decision reflects the RBI's continued support for economic growth, while remaining vigilant against inflationary pressures. GDP growth forecast revised upwards. The MPC revised its GDP growth projection for FY24 upwards by 50 basis points to 7%. This upward revision was attributed to various factors, including strong domestic demand, robust investment activity, and a favorable monsoon season. 3. Inflation projection maintained. The MPC retained its inflation projection for FY24 at 5.4%. Citing evenly balanced upside and downside risks. However, the committee noted that it would remain watchful of evolving global developments and their potential impact on domestic inflation. 4. Policy stance remains withdrawal of accommodation. 5 out of 6 MPC members voted to maintain the policy stance of withdrawal of accommodation. This stance indicates that the RBI remains focused on gradually withdrawing the monetary policy support provided during the pandemic to prevent inflation from exceeding its target. 5. New measures announced. 1. Cloud facility for financial institutions. The RBI announced a proposal to establish data storage facilities for financial institutions, FIs, in India. 2. This initiative aims to enhance data security and privacy for FIs and promote the adoption of cloud technology in the financial sector. 3. SDF and MSF available on weekends and holidays. Effective December 30, 2023, the RBI will allow banks to access liquidity facilities under the Standing Deposit Facility, SDF, and the Marginal Standing Facility, MSF, even on weekends and holidays. 4. This move aims to improve liquidity management for banks. MPC remains vigilant. The MPC emphasized that it would remain vigilant in its assessment of the evolving macroeconomic situation and adjust its monetary policy stance as necessary to achieve its medium-term inflation target of 4% while ensuring financial stability and fostering economic growth. Analysis and implications. The RBI's December 2023 monetary policy decisions indicate a cautious approach towards balancing economic growth and inflation control. While the upward revision of the GDP growth projection reflects optimism about the domestic economy, the central bank remains vigilant against potential inflationary pressures arising from global factors. The continued withdrawal of accommodation stance suggests that the RBI intends to gradually tighten monetary policy over time. However, the pace of this tightening will likely be data-dependent and subject to changes in the economic environment. The new measures announced by the RBI, such as the cloud facility for FIs and improved weekend access to liquidity facilities, are positive steps towards enhancing financial sector efficiency and stability. Impact on different sectors. The RBI's monetary policy decisions will have varying impacts on different sectors of the economy. Here's a brief overview. 1. Financial services. The continued policy stance of withdrawal of accommodation may lead to a gradual rise in interest rates, impacting borrowing costs for corporations and individuals. However, the availability of cloud facilities and improved weekend access to liquidity facilities will benefit the financial sector in the long run. 2. Real estate. A potential rise in interest rates could dampen demand for housing loans, particularly in the affordable housing segment. However, the resilient domestic economy and positive consumer sentiment are likely to support the real estate sector overall. 3. Manufacturing. A supportive monetary policy environment and strong domestic demand are expected to contribute to continued growth in the manufacturing sector. 4. Agriculture. The favorable monsoon season and government initiatives are likely to boost agricultural output, benefiting rural incomes and the overall economy. Conclusion: The RBI's December 2023 monetary policy decisions strike a balance between supporting economic growth and maintaining price stability. The continued focus on data-driven policy adjustments and the implementation of new measures to enhance financial sector efficiency are positive steps towards ensuring sustainable economic growth in the long run. However, the RBI remains vigilant against external risks and is prepared to adjust its policy stance as necessary to maintain macroeconomic stability. Additional considerations: 1. The global economic environment remains uncertain, with risks emanating from geopolitical tensions, potential recessions in major economies, and volatile commodity prices. 2. The RBI's monetary policy decisions will be closely followed by market participants and policymakers and will have significant implications for investment decisions and economic activity. It is crucial to monitor the evolving economic situation and assess the impact of the RBI's monetary policy decisions on different sectors of the economy. 4. Thanks for watching.